Coinbase, or Coin Stock, COIN, is set to do a direct listing in the coming days. The rumored valuation is somewhere between $80 and $100 billion. So people are hot to trot about Coinbase. Now, what exactly does Coinbase do? Now, they are one of the pioneers for cryptocurrency exchanges, for transaction trading in cryptocurrencies. While they currently, in 2020, they made most of their money off of the transaction charges, the spreads, the fees on Bitcoin and Ethereum, they are branching out into other services, and we'll tap into that in just a little bit. Now, Coinbase, Coinbase might just have an unrivaled value proposition, and that's the thing that I look for in all companies. Are you unrivaled? Because if you're unrivaled, it means you have the right to win. You have the right to take share over time. You offer something special that no one else does, and you win. And the early indicators suggest that they might just have that. They potentially have that, especially as they're taking market share, and they might just have an advantage with acquiring potential customers. And heck, they posted 130% revenue growth in 2020. Now, the next thing, because you always have to factor in, and regular viewers know this, you always have to factor in fundamentals against valuation. You have to consider those two components. And regarding that $100 billion valuation, that's a little rich for my taste, too rich for my taste. And I'd love to see some of their non-trading initiatives, their non-trading, let's say business focus, new product launches that they've done, start picking up greater share in the near future for me to get a little more excited on the business versus just this sort of transaction oriented, getting a cut on Bitcoin and Ethereum sales, for me to really get pumped up about Coinbase. This video does go out to Karen and Mike, who are both Unrivaled Investing Journey subscribers, as well as this video goes out to all of the Unrivaled Investing Journey subs. About that, let's do a quick 10-second plug just so you know who you're watching and what you're watching. My name is Daniel. This is Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. If you enjoy learning about potential multi-baggers, types of companies that can go up hundreds or thousands of percent, make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. And if you want to follow my personal journey trying to find these potential multi-baggers, go to unrivaledinvesting.com, click on journey. Now let's dive into Coinbase. What's going on with Coin Stock? So first of all, understanding Coinbase, they aim to be the go-to platform for those looking to learn and trade cryptocurrency. So if this is completely new to you, you can go to coinbase.com, and there's a lot of resources for you to learn, and they incentivize you to learn. They'll say, hey, you take this course or you learn about this, we'll give you some of this cryptocurrency. Like, hey, if it's just virtual stuff that we can print, why not incentivize you with effectively pennies on the dollar of something to say, hey, you now have an owner stake in this. So they're trying to become the go-to place for learning, buying, and trading cryptocurrency. And look, here it is. Get $5 in free Bitcoin if you just open your account. Sign up and get $5 in free Bitcoin. In that respect, it does remind me very much of the early days of PayPal, where it's like, hey, let's just send money to people and say, hey, if you open an account with us, we'll send money to you. So just open an account. Let's drive business that way. And what they're aiming to be is the easiest place to buy and sell cryptocurrency. Now, we should take a step back for a second to understand the broader appeal of crypto versus fiat currencies, which is the broader appeal is you have to understand the framework in which the Coinbase founders are thinking, where they're looking at the current banking system and they see high fees. You have an overcharge or you have minimum fees to have your bank account running. So there's high fees, there's delays. You want to open up your account on the weekend, or what you want to do, you want to make a trade on the weekend. There's delays. You're not able to do that. You have unequal access. People in different regions may not be able to access it, especially if you look at this from a global perspective. Some people, in some regions don't have the same access to banking. Barriers to innovation, where the idea is you have these behemoth banks, and the reality is they're in charge of the innovation, and you start having these neobanks come in that are trying to disrupt things, say, hey, we'll offer new types of products. But historically, it's been these dominant behemoths, the Wells Fargo, Citigroups, Bank of Americas, and they are the centralized banks that run commerce, that provide a lot of the capital, that take up most of the deposits. And so they are a historic barrier to innovation. Could you disrupt finance altogether with crypto exchanges, with blockchain. And so, and another key aspect is currency, is effectively countries that lack in sound money, where you're just printing crazy amounts of money. Now, people are starting to get a little more worried about the U.S. is, hey, what's another $2 trillion stimulus? Just throw that out. Where are we going to finance that? So there is that sort of concern of like, well, wait a second. What if you don't have sound money or property rights? You're in a country where it's hard to even have property rights or a stable credit system where you can get loans or financing. So in those countries, there's a real deep appetite for an alternative, for something where they can put their money and say, hey, I'm not going to be inflated away, and here's some crazy Bolivar dollar, that's been issued in Venezuela. I think it's a 1 million Bolivar bill that's been issued, as Venezuela is having hyperinflation. So, and also you're tapping into sort of no matter what country you're in, whether or not it's Venezuela with hyperinflation, where Bitcoin, despite its crazy volatility, it actually is a stable, relatively stable value relative to something like if you're in a hyperinflation country like Venezuela. It's like, shoot, you only, your price value only fell, let's say 30% in a few days. That's nothing compared to what the purchasing power that you lose in Venezuela in a few months. So that's just something to consider. But at a minimum, I think people have a inherent distrust of Big Brother. They have an inherent distrust of central bankers. Whether or not that's misplaced or otherwise, that's a whole separate other conversation. But there is sort of a distrust that, hey, these central bankers, what are they doing for me? Especially after the great financial crisis, where people are thinking, hey, these central bankers bailed out a bunch of bankers, investment bankers. What did I get out of this? This stinks. And by the way, they're printing all this money and my purchasing power is going to decline and inflation's going up. Like, how is this a win for me? So there is this inherent distrust of the system. And there's a thought process of cryptocurrency as a way of sort of getting around the man. This is a way of escaping him. Like, hey, let's go outside the sovereign currency system, the fiat currency system. So how does crypto potentially solve these challenges? What crypto aspires to be is a digitally native financial system where it's any asset. And I think a lot of people sort of anchor a little too much here on just the currency side, because that's what gets a lot of the noise. Oh, Bitcoin, oh, Ethereum, oh, Litecoin, Dogecoin, or whatever. People are focused on the currencies, but the reality is, if you read Coinbase management's commentary, it's very clear they've got their eyes set on a much bigger picture. It's not just on currency, it's all these other things. Any asset really can become some sort of crypto asset. Crypto can become part of the crypto economy, as it's put on a blockchain, whether or not it's contracts, documents, rights, securities. What if instead of having stocks trade on a stock exchange, you had a crypto version of the stock? So securities or in-game goods, whether or not you're buying and selling goods, it could be a cryptocurrency or crypto good within a game. Now, because all these transactions, on the blockchain are done on a decentralized network, you don't need to have a centralized intermediary or clearinghouse. And that's a key point. When you have a distributed network, the transactions are settled near instantaneously. In contrast, if you look at something like stock trading, as I was just mentioning earlier, you have settlement, which can be days. You can have options, which can take longer. And so here it is. Here's the CEO, co-founder of Robinhood, and recently after the GameStop noise, whatever you want to call it, where hubbub, where the stock, went up, and all of a sudden you had to stop trading because there was liquidity requirements that they were having trouble meeting. He posted something about how it's time for T2 to go, T+2 to go, meaning the date of transaction plus 2 days to settle. So it takes a set amount of time. Like, you trade the stock today, but the transaction doesn't officially settle until everyone's made sure, it goes to the clearinghouse, everything's settled. The shares can be accounted for. Whereas here, if you have a decentralized network for a crypto asset, it settles near instantaneously. So this would solve a key problem that here it is the co-founder of Robinhood was talking about. Now, keep in mind, this is from management's perspective of Coinbase, this isn't to replace the traditional economy. This is to lower the frictions in the economy, where, let's say, doing paperwork, sending in a fax, opening up a bank account can take days or weeks. Here it is, you can do it instantly. Sending funds instead of costing that $30 wire if you're doing it through a major bank. What if it could be really much more affordable because of things like cryptocurrency? Now, the current stated applications for what you're looking at here for the crypto economy is, one is store of value. Now, you can argue on the merits to this, because they say, hey, there's a finite supply of Bitcoins that will be mined, and therefore there's value to it. I don't agree with that argument at the end of the day, because if I stopped making videos today, that doesn't mean that there's an infinite value on these videos that I've created just because there's now a finite supply. So that creating a finite supply of something is doesn't inherently make it valuable. But there is this sense of store value, and management of Coinbase have made a point of creating some sort of stable coin, and that does strike me as their focus. They're saying, hey, you know what, people are interested in Bitcoin, but you do need to recognize that you can do these other cool things with crypto assets, such as cryptocurrencies that are tied and audited based on the number of US dollars, or any pick your currency that's in that crypto asset. So it's tied to that crypto. So you have these stable coins, and then it's a lot easier to start doing these transactions. So that strikes me as an interesting workaround to the volatility that you see with crypto assets like Bitcoin. Another aspect to crypto is that you have 24/7 real-time cross-border payments. It's so much easier. If you're in Venezuela, you're very grateful that you could easily be able to transfer your USD coin, I presume, to here, and you know what? You're set. When I say here, I mean Venezuela. You also have the democratization of markets, where you don't need to rely on these behemoths to innovate, create new products, is that capital can more freely flow because you have all these. It's a distributed network. If you want to have, let's say, lending done by the different network partners, they can do that. If you want borrowing done, it's instead of having everything go through a few key players that determine, oh yeah, this is the rate that I'm willing to lend to you, and having a few big banks decide. Instead, you have an ecosystem of people willing to do it. And that gets to this decentralized finance applications. And this is, in my opinion, this is a very early days here. And this is the part that strikes me as incredibly interesting. This, in my opinion, is actually the future of crypto. This is like Bitcoin and the trading there. I know that gets a lot of animal spirits, or people are pumped. But I think the real value behind crypto assets come from these decentralized finance applications, which is effectively building the tools for the crypto economy, whether or not it's borrowing, lending, trading, insurance, smart contracts. The management Coinbase talks about smart contracts where you can effectively have an algorithm, because keep in mind, this is all digital properties, and so you have an algorithm using a smart contract that says, hey, what's the optimal price? You want to trade your dollars for USD coin, effectively a stable coin? Yeah, we can instantly do that for you. Or you want to do it in Bitcoin? We'll do it at what we think is the best execution. And then we can set it up using that same algorithm. We can set it up so we can just start lending it out. So if you want to get interest on, let's say, this Bitcoin that you're investing in, you can now get a market rate interest rate versus having to go to a Wells Fargo or some sort of depository and they're like, yeah, you're getting 0.1%. That's it. We set the market. Here it is. This is a decentralized marketplace that's setting the rate itself using different algorithms, saying, hey, what can the market rate support? Where people can borrow and they can lend to each other. So this is very early days, and in all honesty, there is a lot of potential here because there are transactions. Trade finance is a big one, for example. That's a multi-billion-dollar market that takes days over time. So if you're able to expedite some of these things, make it, Peter Thiel talks about, if something's 10x better, then you're more likely to succeed. You're more likely to really disrupt a market. I'm not quite seeing that there yet with a lot of these crypto assets, but the potential for finding something that's, yes, this is 10x better for trading, for insurance, for lending, then you really do have that potential to say, hey, this is going to be a crypto revolution. So that's the sort of fine line between crypto mania, where it's like, what's Bitcoin priced at today, versus what are these decentralized finance activities that can be done potentially with a stable coin. So regardless of whether or not you have a crypto assets that's wildly fluctuating, what are the cool functions that you could start doing with a crypto asset that might just be tied to the US dollar. Who knows? So, management talks about imagine a global open alternative to every financial service you use today. That's what they're trying to do. They're trying to create a more seamless system. So that way 24/7, easy access, way more functionality, not reliant on a big clearinghouse or relying on a big bank that'll tell you what's the rate. It's not going to be Coinbase that's going to tell you the rate that you can lend at. They're going to say, hey, here's all these different applications you could pick to figure out what's the rate that you want that you can get. But it's not up to some centralized clearing party. Now here it is. You have Brian Armstrong, the founder CEO of Coinbase, and he likens Coinbase to Google, where he's saying, look, it's the very early days of crypto, where it's about making, where Google was all about making the internet more approachable. That's exactly what Coinbase is doing. It's about, look, this business model, the way it is today, it's going to be very different than it is in the future. Google, of today is a different business model than when they first launched. Now it's a much more, it's very obvious that it's advertising heavy, and they have several different properties that are used by over 1 billion people every day. Heck, you're watching this on a Google property. The difference is that Coinbase is sort of saying, look, this is super early days for where we are. A lot of it's Bitcoin trading, but there's going to be all these different functions that are going to happen over time, like decentralized finance. And heck, who's to argue with someone that looks like Lex Luthor? I mean, looks pretty cool. And you look at, Coinbase today, what they're doing today, and it's about being a platform for connecting retail investors with institutions and developers, network partners, all in one place. And you can see, if I make my mug a little smaller, that there's about 43 million verified users on their platform as of the fourth quarter. Now, the active number of accounts that are trading is much lower. It's closer to 2-3 million, but still it does give you a perspective of how the number of verified users, the people that have signed up for their $5 of free Bitcoin, has grown significantly over time, from 23 million to 43 million over here. Now, and keep in mind, this isn't just Bitcoin. It's across a range of assets where, you can see all these 45 different assets. And heck, I don't even recognize, like, OMG, is that oh my God currency? Oh my God, the currency's going on. I don't know. But, and it's a storehold of assets, like a wallet for all these other different things. So, I mean, they're clearly Coinbase is trying to cover all these different, if there's some sort of cryptocurrency that's trading, they want to be a go-to platform for it, and they don't want to miss out if something, let's say, disrupts Bitcoin. Like, oh, okay, something else is growing, let's make sure we got that covered too. And so, but despite that, the vast majority of their revenue comes from the transactions of people going to Coinbase saying, hey, I want to transact using Bitcoin. That's 41% of their revenue in 2020. 15% was Ethereum. Now, rolling out these other assets, that has been a growing part of their pie, from 18% to 44%, as they grew their supported assets from 25 plus to 45 plus. But keep in mind, this trading of Bitcoin, that's over 50%, and that represents 96% of their revenue in 2020. So you should really think about this business model as being tied to the volume. What's the dollar volume of the crypto assets that are trading, or what's the value of the crypto assets that are trading, and that's based on the units that are trading, or the volume times by the price. That gets you some sort of total, you could say, dollar value, times by whatever take rate that Coinbase takes, where they take a cut based on the value that's being traded. And as you can see, as it's gone up very significantly from 2019 to 2020, and you can see a huge growing interest by institutions, think hedge funds, any sort of, maybe a family office that's interested in getting into cryptocurrencies, and retail trading, where retail trading's really gone crazy, from $9 billion in the fourth quarter to $57 billion, so 6x year over year. And so you can see a lot of, actually 6x in institutional growth, also 6x in growth from 5 billion in retail to 32 billion. So, a lot of growth, a lot of interest year over year, and that's ultimately what's driving their transaction revenue, and that's driving the vast majority of their business. And you can see that here, where 137% revenue growth in transaction revenue, that should be also tied to their other revenue, because if you're looking through the notes, their other revenue is where they're effectively acting as a principal for the transaction, where they're selling their stake in the cryptocurrency, so getting a spread. So if they own, let's say, I'm going to say dollars for a second, like about $100, and then they sell it to you at $102, they get that $2 spread. But this is the transaction revenue is what you should think about as where they're acting as an agent. Here it is, other revenue is acting as principal. That grew 170%. Now that also does factor in interest income, but they do have another fast growing segment. It's their slowest, but still hyper growth, 126% growth, is a subscription and other service revenue. We'll get into that in a second. Now when you see this growth, like holy smokes, nearly 140% revenue growth year over year to $1.3 billion in 2020 versus $533 million in 2019. Like, what's amazing is that they were able to leverage that growth to immense profitability, where they had 35% operating margins in 2020. And so people are like, holy smokes, this is a hyper growth company and ridiculously profitable. Like, yes, bid this up, but I'd say don't get too tied to that 35% operating margins, because management's calling out, Brian Armstrong's calling out, like, look, their plans in the future is to operate at break even. In years where trading volume's better than expected, they'll have profits. In years where it's worse than expected, they'll have losses. The goal is long term to operate at a break-even level, at least for the next few years. Maybe not like 5-10 years from now, but in the immediate term, reinvest all their profits into growing their business, offering other products, maybe expanding their decentralized finance, DeFi, decentralized finance products. And look, here it is. Lex is telling us that every revolution, technological revolution, needs to start somewhere. And he makes the point, yeah, Bitcoin and Ethereum trading, that might not be sustainable. Like, that might be partly driven by animal spirits. That might not necessarily be driving a lot of value to society right now. So there is that sort of implicit recognition in his shareholder letter that, I recognize that this is really just people trading to one another and it's not really adding value. But you got to understand, like, that's where, the internet started off, with like a lot of Wild West aspect to buying and selling domain names. And, as fairly recently, some of these major domains got, tens of millions of dollars of value over time as it was proved out that people would use the internet. So yes, you will have your fair share of pets.com, these domain names that ultimately blow up. But, this is early days. There will be a Wild West aspect to it. It's about people getting familiar with crypto assets. It won't always be a focus on cryptocurrency. It'll be these other things on the blockchain that'll be potentially 10x better than traditional processes. Whether or not it's, opening up bank accounts or transferring funds or lending, or insurance, there's a lot of possibilities with crypto. I'd like to see it, really start playing out, really starting getting traction, really starting to drive their business model. But that's a whole separate other aspect. But you can see that here it is. The dark blue is the transaction. The light blue is their subscription and services revenue. So this is 4% of their revenue. But you can see historically where they started off was recognizing, okay, people need a wallet where they can keep their cryptocurrency and they want to easily be able to do it. We can solve those problems. We can make it easy. We can create a brand where people trust us, and that'll be our initial focus. And so far, those investments have paid off handsomely, over $1 billion in revenue, in last year, tied to that. So, thumbs up for forward thinking back in 2012, 2014 to let's start building out those products. They're launching products now that are saying, hey, what's around the next corner, whether or not it's the savings or borrowing and lending or building new types of products, distributing, storing assets. So this shows you how the business model looks to evolve over time. So yes, most of their business is transaction oriented now, primarily driven by Bitcoin and Ethereum, but over time it could be potentially driven by, let's say, people looking to get a better savings by holding, let's say, Ethereum versus US dollars. And let's say you can have a savings of like 6% in Ethereum. Now I'm pulling that number off the top of my head, but you could probably get much better savings rates in some of these cryptocurrencies. Now that, keep in mind, has a whole other different, aspects of risks, because it's not going to be backed by the government, and like there's going to be a lot more volatility. But these are just aspects this is the Wild West right now of crypto assets, and Coinbase is one of the pioneers establishing themselves as a major brand. And that gets to the point of, are they potentially unrivaled? And they do have some special things going for them, where they call out that 90% of their retail users found them through word of mouth. That's a big deal, especially when your competitors are going to need to spend sales and marketing dollars to acquire potential customers. If 90% of your retail customers are coming through the door because they recognize, oh yeah, Coinbase, that's the one that I've heard about, that's the one, oh, I read on a blog, I learned about crypto assets through Coinbase, I learned about these different types of cryptocurrencies on Coinbase, I'm more likely to, I got my first $5 worth of Bitcoin through Coinbase. So that's, they're doing some super clever things. If you're able to acquire 90% of your customer base, your retail customer base, mind you, from things like word of mouth, that does give you a little bit of a special advantage. And they are leaning into the idea of like, look, we worked early onward to get the licenses and the regulatory approval to sort of do what we have to do. So that way we are a brand you can trust, a place to learn about crypto assets, a place where you can take your hard-earned dollars or euros or yen or what have you and put it in a wallet that you can trust, a wallet that's not going to be, broken into, and you're not going to lose all that money that you put into. And that's why I put a picture of See's Candy here. Is See's Candy? It's a brand of Berkshire Hathaway. I'm obviously a big fan of Warren Buffett, and the concept here is that you trust the brand, and your mouth is this is paraphrasing Buffett. Your mouth is a sacred place to you, and you don't put in things in your mouth that you don't trust. And with, you don't want to put stuff that you don't, like, are you going to put the fifth tier chocolate brand that you've never heard of, and it's like, that tasted wonky, versus a brand that you're like, oh yes, I grew up with this, and, this is the easy way for me to impress the lady. Yes, I'm going to use See's Candy this Valentine's Day versus the unknown brand. And that's part of the reason why they have pricing power each year and raise prices each year. And so they're sort of saying, hey, your money, if your mouth is an important place, think about where you put your wallet. That's as important for a lot of people, where it's sort of saying like, where do you put your money? How do you make sure it's stored in a safe place? So they're building themselves as this brand of like, look, we are the safe place for you to learn and store your assets, your dollar assets into crypto assets. This is a safe place for you to do it, for you to learn, for you to make it happen. And so that's, and they say, look, as it becomes safe and trusted and easy to use, you get more customers. More customers bring more assets. As you have more assets, that attracts other customers. And that gets to the second point of some sort of liquidity or network effect. So this is I'm bringing up 2 points. One is they potentially have a brand that leads to a cost advantage of acquiring customers. And 2, they might just have some sort of network effect where more assets come onto their platform, more people look to trade on their platform, particularly institutions, because they know it's the deepest markets for a lot of these new assets, these new asset classes like cryptocurrencies, wide range of cryptocurrencies. So look, if you have the deepest pool trading billions of dollars of Bitcoin, institutions will more likely be on your platform to make it happen. So these are the 2 components that I would argue could potentially make them unrivaled. And they say, look, if you look at our share of crypto market capitalization, so how much, let's say, assets are going through their platform versus the value of all these crypto assets outstanding, their percentage ownership or their percentage share of that transaction is getting higher and higher. The amount of crypto assets, let's say, that are held or transacted on their platform has gone up from 4.5% to 11%. Seeing that sort of data, that is a good signal to me. That's usually the type of data I love to see with companies is, are you taking share? Because if you're taking share and you're rapidly growing, it does suggest to me that you potentially have an unrivaled value proposition. It does sort of move the needle favorably to like, hey, there's something special going on here if you're steadily owning a new market. Now, this is obviously not without risks. For example, could you over time have lower cost transaction fees from competitors, or more competitors offering similar wallet or crypto exchange functionality, or maybe there's a whole new marketplace for, decentralized finance applications. You'll have to read the SEC filing for all the potential risks, on your own. I'm just calling out a few that come to mind, top of mind, which is, hey, if 96% of your historic revenue comes from transaction fees, what's the risk that more and more companies, and keep in mind, I've done a couple of videos on some SPACs that are doing, hey, we make Bitcoin trading possible. And so that is something to be mindful of as, let's say, cryptocurrency exchanges become sort of table stakes for finance apps, something to be mindful of. Now, what are my thoughts on the valuation? First of all, the valuation's been wildly in flux, where just a month ago it was 77 billion, now it's 100 billion. Hey, maybe after, the tumult of the last few weeks, it's, back to 77, who knows? But I just wanted to call this out here that this valuation is going to be all over the place, especially because it's going to be a direct listing. Some direct listings, they just go right off the bat, and sometimes, it works out. So that is something to call out. So, I'm using the $100 billion valuation. I plugged in what I thought was the shares outstanding from the presentation. These two figures can be wildly off. That said, I am using the market cap based on the most sort of the rumored figure of around $100 billion. So this, don't spend too much time focusing on this aspect. It's really this aspect, which is the hypothetical market cap. And you can see, okay, so they grew 140% year over year in 2020. So then what's the growth rate in the year ahead? And I'm like, maybe you grow 30 to 40% this next year. I don't know. You could pencil out a wider range of assumptions. Like, I don't know if Bitcoin is going to continue growing like crazy in the next year. That's a question for you to ask yourself. I'm sort of assuming, okay, like you had this hyper growth, like maybe things temper a little bit. If you want to plug in, 100% growth this next year, you totally can. Longer term, what's the optimized margins? Well, in 2020, they posted, an incredible 35% operating margin. And so, I'm sort of using that as the high side because I don't think they expected to be that profitable, especially when management's like, look, we're focused on operating closer to break even, but I do put a range of 25 to 35% operating margins. Now, what's the growth rate over the next 4 years? And this is honestly, this is going to be what drives most of the delta and the analysis over time. Is like, look, most of their business is from trading Bitcoin and Ethereum over time, trading crypto assets. So what do you think is that growth rate over time? So I'm saying over the next 4 years, looking beyond 2021, does this keep growing at a hyper rate? Let's say 60% over the next 4 years. So then, you do that, and then you layer on a 50 times multiple to this 35% margin, and you get about 50% upside to a $100 billion valuation. So these are pretty aggressive assumptions. You could argue the implied growth here for, what I'm assuming for 2021 might not be high enough. Like, you could argue, like, maybe they should be 80%, maybe they should be 100%. So that's sort of tricky. That's the wild card, in all honesty, of how that turns out. And I actually talk more about that in the exclusive video, but that's for a little bit later. And so I do a whole range of growth assumptions from 10% annualized, 30% annualized, 60% annualized. And you can see if they don't have crazy crypto transaction fee growth in the years ahead, which is, keep in mind that 96% of their business, or if that 4% of their business doesn't grow like mad in the years ahead, and keep in mind that was actually the slowest grower relative to their transaction fees. If you don't have that, and let's say Bitcoin and Ethereum trading, like Bitcoin trading, really sort of peters out a bit, and people go, oh, okay, let's take a breather. And that's happened. If you look at Bitcoin as, it's trading over time. It's, had its peaks and troughs where, things slow down a little bit. If that happens and you were to assume 5 years out at 20 times multiple, it would just be a bloodbath. I mean, you would lose most of your capital and you'd get a much lower valuation. But, if you assume, hey, 60% growth over the next, few years, about 40% growth the next year, look, I'm just penciling out one scenario. This is a hypothetical here. I create these sheets available for you so you can download, you go file, download, and it's in the description of this video, file download, you play around with the assumptions yourself so you can think about what you think the risk reward is looking at this. Could it go higher or lower? Of course it could, but I just don't have a clear, let's say, line of sight that Bitcoin and Ethereum trading will continue to grow, or that their transaction revenue will continue to grow exponentially year over year. I don't really have a high conviction in that yet. I'd love to see, honestly, more data to see how they execute on that. And so let me give some summary thoughts here. It's very early days in the crypto revolution. Coinbase is attempting to establish themselves as the brand for users to trust and to innovate on, creating the most liquid platform, liquid markets for people to go to. And this can lead to an advantage of acquiring customers because 90% of their retail customers go to them because they're familiar with the brand. This virality does lower your customer acquisition cost, which is a competitive advantage versus other financial apps that are looking to sort of market their Bitcoin trading. But there is real business model. The business model is really just tied to speculative trading, in my opinion, to Bitcoin and Ethereum at this point, as the functionality of both really hasn't played out relative to what its primary use is right now, which is speculation. And Brian Armstrong's point is like, well, that's okay that it's primarily driven by speculation at this point, because look, the internet domain name purchases were primarily driven on speculation then, and look, now they're worth a lot. Some of these domains are worth a lot. Now pets.com isn't, and so there are going to be some duds that some things will fall from glory, but that's the nature of the game. So I kind of want to see how this business evolves more before I personally get excited about it. And look, if you were an investor in Google from the IPO, there were many quarters along the way where you can watch them execute, where you can watch them deliver and sort of see, oh, now they're launching, oh, they just acquired this AI company. Oh, this driverless, Waymo technology. Oh, they just acquired YouTube. Oh, there's all these different functions, and there's a long runway to invest in a company that you think will be a multi-bagger. It's not as clear to me like, hey, will Bitcoin trading continue to grow exponentially? Especially if Brian Armstrong isn't even making the case of like, oh yeah, that's, there's all this functionality with Bitcoin. If anything, the message that I'm reading from the Coinbase filing is like, yeah, Bitcoin and Ethereum is cool, but we built this US dollar coin because we think there's a lot of volatility here with Bitcoin and Ethereum. What if you could have a crypto asset that has all the functionality of crypto, but doesn't have the volatility of a cryptocurrency? And if you have that, could you get the benefits that we were talking about with crypto assets, about the instantaneous, settlement? So I do have some other thoughts about the business model, the risks, but I'll save those additional thoughts exclusively for Journey subs. I do think, let me make sure this is crystal clear. I do think blockchain, I do think the crypto economy does have real potential to disrupt some industries over time. I do think there's that potential for very specific niches of crypto to have a 10x improvement over existing industries. I'm just not seeing it yet clearly with what it is with Coinbase's model. Right now I see it sort of as sort of like very similar to the investment banks on Wall Street, where investment banks on Wall Street, they started off making their money as the trading desk, making money, getting a spread as people were very excited to, buy and sell stocks. And you had a lot of wide commissions because it was early days. I'm very curious how this settles out over time, because as we know with looking at, the investment banks is, let's say, trading equities over time, that turned into a very low profit business for them, or the much higher margin businesses, let's say investment banking or derivatives trading. And so I'm curious what the derivatives trading of Coinbase looks like in the future, and see how that gets traction in the future, as I consider looking at Coinbase. And at the end of the day, I think Coinbase is tapping into an exciting trend, an interesting trend with crypto assets, but I think there are better plays out there, either from a risk reward perspective, because ultimately, you could argue I'm being too harsh here with this growth rate for next year, and that maybe this should be 100%, and that would jack your upside to, let's say, 80 or 90%. But I'm just not, even if your upside was 100% from here, saying the upside's $200 billion, you still have this huge downside just because the uncertainties of what's the actual growth rate in transaction volume over time. And it's not only transaction volume, what's the take rate over time? You are underwriting their take rate. So you could have the volume continue to grow, but what if take rate starts to decline because more and more people are trading Bitcoin and more people are trading these crypto assets, and you can't charge as much? I'll talk about that in my exclusive video. And I also ultimately think that there are better plays if you want to play Bitcoin, if you want to play crypto assets. There are better plays out there with better risk reward that are riding the crypto, the crypto, economy wave, that do have a better risk reward with their underlying business model. That'll be part of my exclusive video. I'll leave a link to my exclusive video in the commentary of this video. I'll pin it to the conversation here. And at the end of the day, you go to unrivaledinvesting.com, click on Journey. There's a lot of potential exclusive content for you to be interested in. If you like learning either additional stuff about videos, about companies, where I'll have a post or a link in the description of this video to the catalog of content. And in the catalog content, I break it out into the different sections, whether or not it's, what are potential multi-baggers. And that's what I'm trying to do each month. I identify at least one potential multi-bagger type of company that can go up hundreds or thousands of % over time. That's the goal, is each month try to find a potential multi-bagger. But there's also an educational tab for videos I've done about education. There's also an exclusive stock follow-up tab where I'm following up on companies like Coinbase for those interested. The deeper dive. This video is already running on 40 minutes, so that's a lot of time. There's also my personal portfolio, where you can see the full download of my personal portfolio. What are the companies that I find compelling at a certain price? There's also stock market commentary about, what do I think about what's going on in the stock market. So you click on the catalog content to see that full list of exclusive content. And at the end of the day, just finding one potential multi-bagger can change your life journey. So if you're interested in following my journey as I try to find these potential multi-baggers, go to unrivaledinvesting.com, click on Journey. And if you enjoyed this video learning about Coinbase, their business model, their potential over time, please make a point of subscribing. If you're already a subscriber, I appreciate that thumbs up. Thank you so much for watching.